What's up, everyone, and welcome to mockpotfx.net. So, this is the first episode of the Trade of the Week series. So, each week I'll be dropping a short video breaking down the charts and giving you an insight on one of the top trades that I have for the week ahead. So for this week ahead, the top trades that I have is Euro USD, Pound Aussie, CHF JPY, Pound CAD, Pound Yen, and Pound Swiss. So on this video, I'm going to break down for you Pound Swiss and give you an insight on what to look out for heading into next week. So I hope you enjoyed this video and let's get into it. So starting from the weekly time frame on Pound Swiss, we are looking for possible short trades, simply because from the weekly time frame we can see we had a massive sell-off, then price started to correct, came back up, came and tested the levels of 1.23, tapped into it, formed like a tweezer top formation, heavy impulse down. So we had like 3 weeks of heavy momentum down. Then the last 2 weeks had been slightly bullish. Price started to push back to the upside, and now the area that we've just hit gave me some bit of consideration and interest to look out for heading into next week. So simply because this area, if we zoom in on the charts from the daily time frame, we can see like this area has been a massive area of liquidity. And if you're a person who's not in MacBook and you don't know what liquidity areas are, so simply liquidity areas, these are areas where most of the orders are being picked out from. So it is most of the areas where buy trades, sell trades, take profits, stop losses are being taken on. So these areas usually consider areas with multiple wick rejections, different key levels. So once you align these areas, you might be able to get a good understanding of where most of the trades might be picked out from. So zooming in around this area, we can see like around this region here, this has been the previous area of liquidity, and now we've just tapped into it, or we are now approaching that area as well. So if we zoom in around that area as well, we can see that this area is nearly or it's slightly at around 1.88, which is a good round number. So if you're a person trading key levels, you know like most of these key levels are usually round numbers, numbers or psychological numbers. These are areas where most institutions take orders from, and aligning them with liquidity levels, you might be able to get a good understanding of where you might take a buy trade or a sell trade. So not getting into too much of the specifics. If you want to know that, you will need to enroll to our course, and you can learn more about those liquidity levels and key levels as well, how to spot them, how to trade them, and how to mark them on your chart. So right now we just around 1.88. This is a good round number. And looking from the 4-hour time frame, this is quite interesting because looking at the candle shape now, we can see like we had like 3-pin pattern formation, 1, 2, 3. So this is a good area as well because it's a round number, 1.88. If we look left, we can see like this area had the market had trouble breaking through previously. So it's a psychological level whereby the market might have trouble breaking through. 1.88, let's just mark it to be specific. So 1.88, as we can see, the market had the first attempt, then tried for the second time, failed, then came for a second time. Now for the third time, it broke through, but the market didn't close above. So this area, the market has lost momentum around this area. 1, 2, 3, 1, 2, 3. So 3-pin pattern formed there, multiple wick rejections. As you can see, it's a massive area of liquidity. So this region marks as an area of significance, and we need to look out for that. So coming into next week, we can also see like there is a possible inverse head and shoulder forming. So we have the left shoulder, right shoulder, and the head. So this can be our neckline, but also take note that this is another area where you can get high probability setups. So These high probability setups are areas where uh, you take trades from the top of the wick, bottom of the wick. So I don't want to get into too much specifics there and confuse a lot of people, but just breaking this down, we can see like 1.2 is another area where we need to look out for. So if the market does manage, sorry, 1.8 to 8, 10, yeah, around that area. So if the market does manage to break above, so if the market does manage to break above, so what's the possible next target for the market to hit? So the next possible target for the market to hit is 1.202. So that's the next possible target. So if the market does manage to break above. So why am I going all the way explaining all that information is simply because when you're trading, you need to forecast your positions. You need to forecast the positions for possibilities of either moving to the upside or moving to the downside, because the market has possibilities of doing all of them. So you need to understand the probabilities of having a long trade and having a short trade at the same time. So this is also our previous high point. This is our previous significant high point. So simply the market has been forming higher lows, sorry, lower highs and lower lows. So lower high here. We have a lower low there, lower low there, lower high. So this can be a possible lower high point. So to just mark this area, you can also draw up your Fibonacci, simply, and you can see like this area here marks the 61.8, a very high probability area of reversal. So this is the golden retracement area. So the market might trick people, catching them on the wrong side of the market. So there is also, we need to mark our region between the 61.8. Sometimes the market does spike above the 61.8, catching people on the wrong side. So between that region, you can also mark the 71% region. So if you look around, if you look on the left side, you can see around the 71%, there's massive wicks being thrown around there. So if I just take off this line and take off this line to just have a clear chart. So what's the next possible target? Like the market might give you the highest probability trade is the 71%, because that is where the market has been throwing most of the wicks if you look at from the 1 hour time frame. So your stop loss might just go a few pips above the 78% fib, so just slightly above. So let's say a 50 pip stop. So what's your target? So the Fibonacci can be used for both entry points, reversal points, and also targets. So we have the D extension legs or levels. So the first D extension level falls at 1.520. 1.1520. That's the first target. So if the market tricks its way to the upside, catching people on the wrong side, making people think, okay, this is about to head to the upside, and it doesn't, then you might take a trade from 1 point. So where does this fall to? 1.1920 or 1.1. So that's the area that I'm looking out for, a possible short trade. So possible short trade there, 50 pips top, 50 pips top there, targeting 1.1520, gives you around almost 400 pip trade at 7.9. It's roughly 8% risk to reward. So a very, very massive trade coming on pound Swiss. So can this go early? So if I just take this off, so can this go early? Yes, it can. So simply from 1.88, that's a good psychological number. So the market might just open and maybe gap a little bit to the downside. If that happens, then you might take the trade from 1.88. That's a good round number. So just being conservative, slightly above, maybe 60 pips stop. Might even take a 40 pip stop, but there's a high probability like the market might spike above there, so you don't want to be caught there. So maybe 55 pip stops from there to, and your target, if you set it to, what was that, level 1.1520, because it's the D extension leg. So this can be the new lower high point, and this is the possible next lower low point, which also falls in line with this massive level of liquidity here, massive wicks being thrown there. So it's a good take profit point. It's an area where you might be able to take your profit. So very clear short trade coming on pound Swiss. So can this go to the upside? Yes, it can. So if you see something like this, impulse up, the market impulses up, forms like a continuation pattern, then that's a good sign, like this is still heading to the upside. But at the moment, massive probability of heading to the downside. So that marks the end of this market breakdown on pound Swiss. So be on the lookout for a possible short trade, a massive short trade, and please send us your screenshots. Screenshot this if you take a trade on pound Swiss. Send your results to the MarketFX page on Instagram. Tag us, repost us, share your photos, share your results, and we'll be happy to repost them on our page. So happy trading, guys, to the week ahead, and I hope like you enjoyed this video. More videos coming and more content coming into next week. Happy trading, and I'll catch you on the next one. Cheers.